You may have heard the conditions in China have gone from bad to worse. In today's video, I'm going to show you how that has deteriorated even further. You came here for the truth, so let me unveil that for you. We have to understand that China is a bellwether. They are a signal of what's happening globally. They are, whether we like it or not right now, the manufacturer of the world. Their logistics are farther than any other country out there. And so we pay attention to that as an indication of what's happening globally. And right now, it is screaming. Red flags are waving. And I'm going to show you the details right now. Can you believe that Evergrande, Country Garden, and the real estate crisis has actually gotten worse? Yes, even worse. Let me show you. Let's begin right here. The debt situation, obviously, it's not just China, everywhere. This has become a problem. There's no question, and it's only going to get worse. Why? Because China has stepped up their economic aid with new debt issuance. And you could see right here, fiscal debt ratio raised to about 3.8% of the GDP from 3%. So essentially saying we're going to do more than what we did before. We've got to get the economy moving again. We have to get things rolling, and we want to export more. But there's a problem. These countries are saying, wow, we don't need more. We don't need all that stuff right now because we bought so much of it and there's not enough demand. Retailers in the United States are effectively, sitting on a lot of inventory. They can't really sell that off. They're doing so at discounted prices. And I think right now, inside of, the whole holiday shopping, Black Friday, all that, there's going to be big sales from a lot of these retailers simply clearing out the last year's inventory. We'll see what happens. I'm paying close attention to that for my businesses, of course. We'll see what the expectation of the consumer is. Looking at China's sovereign wealth fund buying shares in the big four banks. Now, this was from earlier, but I felt that it was important to show you that actually they're going in, not only doing debt issuance, but they are buying up the shares of the companies, trying to put a floor. They're trying to put a floor in every aspect here. And so we see that right now come in, and they don't hide it. It's not like in the United States, the plunge protection team, you never know when they're at work, but in China, they make it clear. Looking at this, unemployment is a factor. And so, this is for youth unemployment, but you see what happens. And part of that is a cultural change where we have seen young people in China, they're saying, I don't want to work in the factories. I don't want to work there. I'd rather work somewhere else. Not going to do that stuff. And so that's created a hard time for these factories because that's a lot of the jobs inside China. If you don't have the youth coming in to work on that, well, then you have to start paying more money to the existing group of people that are willing to work in order to incentivize that. But that puts upward pressure on the prices. And guess what? When Walmart and all the other retailers out there are asking for stuff, well, then the suppliers are saying, we got to charge you more. Remember, we used to charge you $10 a unit. Now we got to charge you 11. Costs are up. And that means they go back and they say, okay, customer, we were charging you $30 for that product. Now we're going to charge you $35 because they are increasing their price. And of course, they always want a bigger margin, the biggest that they can handle anyway. And this is a good indication as well. Metals supercycle to clash with gloomy global economy, specifically saying that there's cooling EV, electric vehicle demand in China. And so copper is a big one to watch, but of course, all the metals. If they need to build buildings, they would do that. They would be using copper. They would be using cement. They would use all these different things, but now they're not doing so as much as they did before because their real estate industry not exactly doing so well. At the same time, electric vehicles, they can only build so many. There are a lot, but they're also trying to export those too. And so they want to be the biggest car manufacturer for export. They want to do this coming at a time in which things are very expensive and the economy not looking so healthy right here. They need to grow. And so what are they going to do? How are they going to get out of this right now? They're trying to stimulate their way out. And my message to you for this video today, for those who have stayed this far in, is to understand that if they are able to generate a lot of inflation inside of China, that will spill over into the whole world. You've got to understand how this pattern operates. It will go from China to the rest of the world. And then we will see central banks around the world cutting interest rates, printing money, and of course, government spending, spending, spending. So watch China carefully and understand that it is an indication of what will happen to you no matter where you are. Mega cap China tech bears the brunt of the deepening foreigner exodus. So right now, there's this back and forth. There's this tension. There's the BRICS nations, all these things happening. And so foreigners are saying, I'm taking my money out of here. I'm running for the hills. I'm going to put it somewhere else. Maybe I'm going to put in U.S. stocks. Maybe I'll put in U.S. bonds. But I don't want to have as much exposure to China because we don't know what's going to happen. China suffers plunging foreign direct investment amid geopolitical tensions. Just showing us the data. Basically, the foreign direct investment tumbled 34% in September after recording a double-digit fall every month since May. So it's just constant. Okay, I'm trying to give you the real data. And that brings me to real estate. It's still compounding. The effect is still going on right now. And I need to bring you some details. China's giant property developer Country Garden has declared in default on its debt after failing to make a bond repayment. And so this is it. They can't pay. And we are seeing that over and over and over again. Country Garden, massive. Evergrande, massive. Country Garden has more properties than Evergrande does. Evergrande is more in debt. But both of them together are massive on a, when you look at this globally, but most important, you got to look at that debt and what are they going to do about it? There is no resolution to it. This is a crisis that ultimately can't be fixed, and the demographics problem on top of it makes this even worse. So I'm telling you right now, watch the inflationary factors. They can always fix the problem, but not without inflation. Okay? Problems are arising today. It's crunch time for the world's most indebted property developer. Evergrande faces liquidation in a case that could set a precedent for the troubled Chinese developers. We're going to see what unfolds here. Just understand it's one company after another. HSBC takes $500 million hit on Chinese real estate and warns of further deterioration. Like I said, the problems are not over. HSBC, you're a little behind the curve because I've been talking about this for a while now, okay? Ping An real estate is China's property's new hot potato. And you will see that, like I said, one after the other. Okay, that's the point. And so we can see for ourselves what is happening right now today, that the problems in China have only been exacerbated by, number one, starting with the lockdowns. And then, of course, as we've gone into this real problematic era of we need stimulus to grow. And that is not a sensible long-term thing. But what all governments will do is they will need to go into more debt, just like we saw with China, more debt issuance. And how do you resolve that? Well, you've got to get investors to come in and buy that. In the US, certainly they can do that. But as more debt is issued, what happens is the yields start to rise. And so that means instead of giving, let's say, you're going to buy, they wrap this debt up in a package and they say, okay, this is a little package right here. We're going to offer this at 5%. Okay. This debt is 10-year. It's got 5%. Okay, great. But the more debt that you issue, essentially you increase that yield. You increase that percentage. And so it's not 5%, it's 5.2, it's 5.5. So who knows? Who knows how high it will go? It depends on how much debt they issue. But they can't fund that, right? The government has to eventually pay that back, but they can't do it. So the interest that they owe is going to be incredible. They literally mathematically pushing themselves into a place where they have to print money in order to resolve the crisis. And of course, the devaluation of the currency will commence. If you want to know the details about, basically what I show you right here is Seeking Alpha, and what I like to do is look at what happens within any particular industry, any particular situation. Check out Seeking Alpha because the paid version, they always have better information than what you'll find in like the generic news, because the paid info, they're not worried about keyword stuffing, making sure the article has all the right things. Like for no reason, they just mention something. Why? Because those are keyword phrases that they want to show up with search engine optimization. I want the data. I don't care about SEO. Okay, but that's what happens when you get free info. And so, this is the problem that we have right now. But when you pay, you simply just get the info that you need. So check the link out. This is a 7-day free trial. Just go through there and play around with it, okay? Link in the description. You'll see that. And the comment of the day, I just want to just touch on it a little bit here. Dan says, China is no different than any other startup company. As long as the investors are happy, the money will flow. China is doing everything possible to satisfy the New York global banks and investors who have engineered China's rise. Insofar as risk is concerned, they are spreading their bases. Their technology gap doesn't really exist as long as the transfer of advanced developments continues unabated. What do you think? Is that true? Is that accurate? I'll leave that up to you. I want to thank you for your comment there. I want to thank you for all your comments. If you appreciate this information, hit that thumbs up button. When you do, you're supporting the channel. So I want to say thank you to you for doing so. And of course, as always, definitely come back tomorrow because I've got some really good info I want to share. Take care.